Quite excited about this next discussion, multifamily investment opportunities in a brave new world. Where are the buying opportunities and how will the continued lack of debt capital impact values going forward? Our moderator is Mike Kelly, president and co-founder, CALDERA Asset Management. Mr. Kelly has more than 20 years of real estate experience, encompassing more than 200 different transactions valued at over $5 billion. Over the past 5 years, he has managed acquisition teams who have sourced over $3.7 billion in transactions. He has also closed over $2.2 billion in transactions, $1.2 billion of which he personally sourced and closed. And prior to founding CALDERA, Mr. Kelly was the managing director and chief acquisition officer at Dividend Capital Total Realty Trust, a private REIT based in Denver. His previous experience also includes senior vice president of acquisitions and dispositions at United Dominion. Mr. Kelly gained extensive experience in the pension fund advisory while working as senior vice president of acquisitions at Erdang and Bank of New York Mellon, and as principal at Lendlease. He was also a founding partner of Apartment Realty Advisors. Mike.
Thank you. We're gonna do something different here. We're gonna make this really open up to everybody. We've got some slides, but Brian and these guys have done a great job. You've got a very well-rounded cast of people here, from core investors to value-added investors to opportunistic investors, debt investors, and research. So I'm going to turn it over to these guys. I'm going to ask some questions. Should I work this thing? There we go. A couple questions these are just the basic questions we're going to talk about today. Okay, are we at the bottom? Okay, what kind of deals getting done? Everyone's talking about cap rate compression right now, and is that real? Is it fake? Is it a head fake? So I'm just going to go right down the list. I'm going to let these guys introduce themselves, and then we're going to go ahead and start. And then please ask questions throughout the presentation, because that's probably the best way to get this interaction going. Go ahead, Mark.
Okay. My name is Mark Stern. Can you guys hear me? And I work for WATERTON Residential. We are a multifamily owner and operator. We today manage about 16,000 apartment units nationally. We own 14,000 of those, so we do a little bit of third-party management. We've never been active in actually New York City, but we are a national owner. We are on the East Coast, West Coast, and Midwest. We're based in Chicago. We're currently out in the market with WATERTON Residential Fund 10. It's a value-add fund. It's a joint venture with us and the California State Teachers. As far as the transactions, I'm Senior Vice President of Acquisitions and really head our acquisition group. And I was looking through my notes as far as it relates to deals and what we've been doing. 2007, I think we did about $1 billion of transactions. 2008, we did about $50 million of transactions. And today in 2009, so far, we've done $12 million. And that was buying a B piece of a Freddie Mac CMBS execution. So this is good for me to come to these conferences because as an acquisition guy, we aren't doing too much today.
Yeah. Can we take this off?
Yeah.
Make it easier instead of switching the entire thing. Anyhow, I'm Kevin Davis. I'm a partner at Area Property Partners. We are a global private equity fund manager. We manage really 6 different targeted funds. 2 of them are foreign, one's out of Europe, one's in India, and we have 4 domestic funds, a debt fund, a value-added fund that is specifically targeted at urban multifamily, and we have an opportunistic fund also. We have about $3.5 billion of new capital to put out. We are actively looking for new opportunities. We're very focused and very attracted to multifamily. Right now we own about 17,000 apartment units, primarily in the central cities and for reasons which the Census Bureau data supported. We are very focused on buying urban and infill multifamily. And we do invest across every asset class and every asset type, and multifamily is the one that right now we see a lot of interesting opportunities in, and we think we will continue to see good opportunities going forward.
Hi, Mason Sleeper. I'm a principal at the PRAEDIUM Group. We are a fund sponsor, and we're on our 7th fund. It's a $900 million fund. It's opportunistic. And like some of the other people around here, we've been pretty patient. We're now in our 3rd year of our investment period, but we've only invested a little over $100 million. Our largest concentration historically has been multifamily. We've done both value add, opportunistic, but as well in New York City, we've been a large owner of rent-regulated apartments, largely north of 96th Street. Fortunately, they don't rely on luxury decontrol for the most part. We're being patient, but we also see right now on a relative basis, because we also invest in office and retail and industrial, but on a relative value basis, we like the multifamily sector right now for a lot of reasons, which I'm sure will come up later. But the relative quality of the rent roll and the financing available, primarily, there's still a relative value there.
Hi, my name is Tim Wang. I'm with ING CLARION. We are an investment advisor investing in commercial real estate on behalf of our institutional client. We are part of the ING real estate platform. Globally, we have over $100 billion under asset under management. In the U.S., we have about $45 billion in 3 platforms. One is CMBS, the other private equity real estate, and also public REITs. We have a significant exposure to the multifamily sector. In 2005, we privatized Gable REITs company. So right now, we have about 15% allocation in the multifamily sector across the country in different investment strategies.
Hi, I'm Max Herzog. I work for the Debt and Equity Finance Group of CB Richard Ellis here in New York City, specializing mostly in multifamily finance, debt finance. We're a Fannie Freddie lender, as well as work with a number of the local banks and lenders to finance multifamily properties.
Okay, thanks, guys. A couple things. We're going to go through a couple slides and sort of ask questions along that. You've got debt, core investors. What we do, we're reorg guys. So our world isn't as rosy as some of the guys up on the panel here. So you're going to get some different perspectives on things. Maturities. Everyone's seen the schedule. There's a ton of them. How are you guys looking at that? How are you looking at your existing maturities, and what are you planning on doing with them? Mark, what are you seeing in your panel? In your portfolio, I'm sorry.
Well, I guess lucky for us, when we bought all of our properties, which was a lot of 05, 06, 07, we did long-term permanent financing, so we've got some years left. We've got one property out of 45 properties that matures in 2010, and we've been pretty proactive. It matures September of 2010. We went to our lender early this year. We knew we had a little bit of a gap between where we could refinance and where the existing loan was. But it's interesting because it happens to be a property in Phoenix, and when we went to the lender originally, and this was probably January, February, the apartment market was a lot different back then. I think he gets into it later on his slides about cap rates and what's happened for A-class properties. But I would say in February, the property was worth $25 million to $26 million. We have a loan of about $33 million, and today I'm being told that it's worth $42 to $43 million as a property. So my lender's gotten pretty quiet with me and stopped our negotiations as these cap rates have changed. But for the most of our portfolio, we're pretty well positioned. We don't have any real maturities until 2013, which I think is where Mike shows a lot of the CMBS debt coming due.
Yeah, I think like Mark said, we're pretty fortunate also in the sense that when we bought our multifamily investments, our buildings and portfolios, we purchased them with long-term debt. So in general, we don't have a lot of near-term exposure. Actually, we have one loan coming due next June, which Max is out in the market on. So if anybody's interested in financing that, it's a small one. But multifamily in our minds is an asset class that really pairs very well with long-term fixed-rate debt. And that's how we bought all of our investments. That's how we buy all of our investments going forward. It was tempting to take floating.